When it comes to trading towards the money, the first thing to know is market flow. Is market flow up or is market flow down? Let's just say price is respecting these up close candles. Let's just say there's up close candles in here, and then let's drop one in here too. Let's just say there's an up close candle in here, and there's another up close candle here, and let's just say there was one over here too, somewhere here like this. If you're seeing price respecting these up close candles, let's say price is trading up into these up close candles here, then you want to stay bearish. Okay, that's what you want to do. What you would look to do is you'll be looking to attack the sell side liquidity, the money resting beneath these lows. That's what you'll be looking to attack, the money resting beneath these lows over here. So in other words, if market flow is down, you'll be targeting the bottom side of liquidity, the sell side liquidity, the sell side liquidity. And it's the same for if market flow is up. And so it's the exact same thing for if market flow is up. And so if price is respecting these last down close candles, you'll be staying bullish. And then what you'll be looking to do is attack the buy side liquidity. I've put a little pound signs there now because you know your boys from the UK. So shout out to everyone in the UK. If price is doing these higher highs and higher lows, you want to be jumping in and taking out the buy side liquidity. So in other words, the money on the top side. Technically, this high becomes protected. And what would happen is price shouldn't trade above this high. They shouldn't trade above this high. This high should hold. This is why you should be looking to enter when price returns back to it to take it down. And just so you guys know, in this high, there could be a high, low, and then another high that ran liquidity and then drop price down. So in other words, what you'll be looking to do is you'll be looking to get in during that institutional candle. I've got a whole series on the institutional candles. I'm going to put it on a card right now. So watch this after this video, and that would help boost your confidence in entries and understanding what the institutions are doing too. But to the right now, you can see we're going to be attacking that buy side liquidity, the money above this high. And so these lows become protected. And within these lows, it's not just going to be a low like this. It could be like a low like that, boom, then a high, and then a low, and then it breaks above. Just imagine this being down here. And so you're going to be looking to get in somewhere within this down close candle. That's what you're looking to do. All right, guys, so here's another example of trading towards the money. This is probably going to be the last diagram I show you. One of the questions I always get asked is which liquidity to go for. It's the same response. If market flows up, you target that top side liquidity because the bottom side liquidity should hold. And it's the same thing if market flow is down, you target the bottom side because those highs should hold. And so this is just a little random example. I've completely put it together, just combined a few things. So first of all, what we're going to identify, that there's equal lows, or let's just say consolidation, all kinds of consolidation happening from here. And so what do we see though? What do we see? We also see that prices run out the liquidity to the top side, but it's not taking the liquidity on the bottom side. And if market flow is down, produce like a little down arrow here just to show you guys, basically market flow is down, just market flow is down. What you want to do is when they've done something like this and it's trading higher, you want to be looking for something that they're going to reverse on. And so this is just an example of what I showed you, what the high or a low would look like. There'll be a high, there'll be a low, there'll be a running of liquidity, price expands lower, then starts to consolidate, it breaks higher, in other words, it's retracing, and you want to stay in line with market flow. You want to stay in line with the trend. And so if the trend is down, what you want to be doing is you want to be entering during somewhere within this last up close candle, which ran out the money. So in other words, this would have been an institutional candle, and then here you would have got like a up close candle like this. You're looking to be a seller when price taps into it. And so when price trades into it, you want to be getting in whilst the institutions are mitigating their orders, and then you want to attack the liquidity. They run the money to the top side. Yeah, boom. There we go. So there was the money up here, but they never ran the money to the downside. Yeah, so I'm just gonna put 2 pound signs here. There we go. So they've run the money to the top side. They've run the liquidity. You know what happens with retail? They're gonna be putting their stop loss anywhere above, from the high of its consolidation range to roughly about 10 to 30 pips. That's what they're gonna be doing. And then this is what you would do. You would jump in with your position at the last up close candle in this scenario, and then you would take price lower and you would take it straight to the money. Straight to the money, like this, straight to the money. And you always target the money because price is drawn towards the money. So price is rising to go and mitigate whatever they've left unmitigated, and then they take it to the money. Okay, take it to the money. That was an example of catching an entry from the institutional candle. But like I said in one of my videos about high probability trading, there's nothing wrong with waiting for price to respond from this area first and then pull back for a lower high and then catching an entry to take price down. So no matter what trading strategy you have, technically it should work as long as you're trading in line with where they're heading to, which was the money to the bottom side. So I just want to let you guys know there's nothing wrong with waiting for price to respond from your area first, then catching a lower high and then taking price to the money. Now I've explained that, I'm going to take you to the charts to show you guys some examples of trading towards the money. And like I said, some of these videos were recorded a few days ago. So yeah, your boy's gonna have a little change of outfit and that. And you might not get the cursor thing as well because I recorded it on a different system. Just a quick interruption in the video. If you are getting value from this video, definitely subscribe to the channel. Also, don't forget to smash that thumbs up button. Let's try and get this video to 400 likes. So what we're going to be doing right now is we're going to be going through US30 and showing you an example of trading towards the money. So right now you can see US30. This is just a blank screen. I've got my annotations hidden right now. So first of all, I'm going to quickly show you my mentorship group where I was actually talking about US30 first of all and talking about where I'm looking to buy from. Okay, so we're in my mentorship group now on my Discord. If you do want mentorship, hit me up on Instagram. Just type in mentorship and then we can get to work on that. But this is where I was just letting the team know this is where I've bought US30 and I was targeting the last up close candle, as you can see right here. So I literally bought it here and there's a reason why we bought it here, which I'm going to explain to you in a bit. Then you can see down here I zoomed in into this time frame to let them know what I was seeing a bit more closely. You know, price moved pretty fast, so things were just moving pretty fast, but I just wanted to show them a bit deeper into what was going on in this level, which is what I'm going to show you right now. So I'm gonna have my annotations on now. So like I said, this is just an example of trading towards the money. Now I'm gonna put a replay mode on and just put it right here. I might have to replay it from a bit deeper. Let me replay it from roughly about here. So the first thing to identify was that price was moving in a range. And so this was the range price was moving in, as you can see. This was the range right here. All of this was the range. I was identifying that they were running out equal lows. Yeah, I identified that there was more equal lows down here as well and that they were running them out. How they ran them out was the reason why I didn't jump in based off of this push up. I wait for price to come down to run out liquidity first. We had liquidity down here. We had relative equal lows down here. And let me quickly zoom in. Like I said in the very first part, it doesn't need to be exact. So let me quickly move this to the arrow thing. There we go. It doesn't need to be exact. It doesn't need to be exact, as you can see. And so you can see price here kind of created equal lows again, you know, a little smaller one on a lower time frame, but it was not exact. It didn't come to the exact same point. The opinion behind it is the same. This is relative equal lows. There's going to be stop losses beneath this area. And so you want to be looking to jump in when people are being stopped out. In other words, if you're bullish or if you're done trading, you're done trading. Don't be trying to jump into nothing. Okay, you're good. Be satisfied, be satisfied, be satisfied and move on. If this is your potential entry point, then you want to be looking to jump in when people are being stopped out. What we're seeing here right now is that there was equal lows, but you know me, I'm always looking for what are they grabbing? What are they looking to reach for beneath these equal lows or above these equal highs? What are they actually going for? What are they going to use to reverse price? I'm always looking at that. I'm always thinking about that. And so this is when I look to the left. And don't forget, we're trading towards the money. I'm identifying that there's going to be money up here. The people that jumped in here, right here, they would have put their stop loss above the high. There's going to be money up here. There's going to be some kind of stop losses up here, some kind of liquidity up there. And so I know where my money is. I know we're trading in a range. And so what am I going to do? If they're manipulating the lows of this range, I'm going to take the buy up to the top side. But it's where am I going to take this buy from? There was a last down close candle play in here. Delete this. There we go. So this low ran out the liquidity beneath the previous candle. Okay. So I identified this as a last down close candle. So if it dropped a bit more, that would have been even better, but it's all good. You know, they're not always going to look perfect. They're not always going to look the same. But you need to know exactly what the play is. What I wanted to see was I wanted to see them trade lower, run out the equal lows into my last down close candle, as you can see. And then this is where I was a buyer. This is where I was a buyer, and that's when I was letting my team know that, okay, cool, I just jumped into US30 for the buy, and I'm going to be targeting the last up close candle like you saw on my Discord. These aren't signals, by the way, but I like to share this information so my mentees can learn also. And so this right here, they tapped into this level to the T, and then they started pushing up. So we've identified money on the top side. We know there's money up here. We know there's going to be money up here. And we also know that there's relative equal highs. There was a bit of consolidation here too. I'm going to be thinking, okay, cool. So all the money's to the top side. All the money's on the top side. If we're running out the lows, we run out these lows. We run out these lows over here. And we've also run out these lows now. So if we're manipulating the lows, I'm going to be looking to go higher soon. And so this is why this was my opportunity or my area to be bullish on US30 is I'm looking for price now to trade higher. So what's going to be the draw on price right now? What's going to be the draw on price? These relative equal highs, or it was a bit of consolidation here. Look, we had all kinds of stuff in here. So in other words, there was money up here. If I just mark it up real quick here, as you can see, You see how they consolidated, they kept the price within this range for a bit of time. Just like part one of this video, I was talking about consolidation and how there's money on both sides of the market. So look what they've done. They did not run out the top side, but they ran out the bottom side of the market. So instantly I'm going to be thinking there's going to be money up here. These are going to act as a drawn price. This is why I was looking for price to beat this high. The moment they beat that high, I'm instantly thinking about, so where's the next point of liquidity? Where's the next money? My original opinion was up here to beat this high. You see price is pushing up. Price is pushing up right here. Price is pushing up. We've not run out the money. I've identified the money over here, but price is still pushing up. Then I sent out another update saying, you can see what's going on. You can see it for yourself, man. We've violated the highs now. We've completely destroyed the highs with force. And look how they did it as well. They did it with some good force. Let me hit play here real quick. This is my target here. And so I'm going to hit play one more time just to show you what else happened. Okay, there we go. They started rejecting, as you can see, before they got to my target zone. And so this is where some people start panicking and some people start getting nervous, they start getting sweaty, all kinds of feelings start getting involved, and you're like, okay, cool, is it going to get there? Is it going to be a sell? If ever you feel like that, just take partial profits, calm your emotions down, keep it moving. And so I'm going to hit play again. This one I identify equal highs over here. And so this is just a good sign for me. Whenever I see equal highs, I know price wants to continue to push up. And so this has just gave me more confidence to hold the trade. It started pushing lower, and so more emotions would have been played over here. People would have been thinking, is it a sell? Is it this? Is it that? But we know that it's traded lower. It ran the liquidity to the bottom side, and now we should start getting a push up. Hit play again. There we go. And then this is when it hits TP right here. You need to know the conditions of the market you're trading, whether we're trending higher or trending lower, whether it's a pullback or whether it's consolidation. When it's consolidation, there's no point trying to hold the buy from here just for the extra piece. We've run out the last up close candle. We've run out liquidity to the top side, and we're good now. We're Gucci. And also, you don't want to be buyers above here. Some people would have done breakout buying up here. You're basically going to be the person I'm exchanging contracts with. So you don't want to be that person, man. Alright family, so this is going to be another example of trading towards the money. This time is going to be in a trending environment. I just showed you a consolidation environment. Now we're going to be in a trending environment where Euro USD is bullish. As you can see right now, Euro USD is very bullish. You're making higher highs and higher lows. And so this is in a bullish environment right here. And so this is what I wanted to show you real quick. First, what I'm going to do is I'm going to show you my mentorship group where I was talking about this trade right here. So let's go to it now. So this is the example that I'm going to be showing you guys here. You can see this is Euro USD. Let's put on the analysis back on. This was the portion of price that we were looking at. What we was looking at, let's go to the 5-minute time frame so you can see what was going on. Maybe let's go to the 1. Let's go to the 1-minute time frame. So first of all, we can see that price was manipulating lows. So there was this massive push up that ran liquidity to the top side. First of all, here, as you can see, 1-minute time frame that ran out all this liquidity, this push up here. This is the push up from this low to this high, first of all. And then we move to the left. Now let's go to the left. And then we start getting a manipulation of that low. That was where they started pushing up from to run out the high. We start getting manipulation of this low. But then what do we see? I see a last down close candle right here. Okay, we see a last down close candle right here. And then we see a break above the last down close candle. Because I'm bullish on EURUSD, this is going to be a bullish sign to me. When price returns back down to the last down close candle, I'm going to be bullish. And so I wasn't aware of it down here, you know, just probably wasn't looking at the charts, but then eventually I saw price was here. We're trading within this last down close candle, and so this is where I jumped in. At this level now, when price is consolidating, what do you think is happening? Price is accumulating orders. Because I was in from the accumulation, this is why I had to wait out this. I had to wait this out, be patient. I wasn't nervous. My emotions went all over the place. I just had to wait it out. I'm going to go to the 50-minute time frame. I'm in a 50-minute time frame now, but just a quick one. If you do hear any noise in the background, the washing machine is on and it's just doing the most right now. So 50-minute time frame, as you can see, that was our last down close candle within this 50-minute candle. And so this is where I entered off of this candle here. So now we've got our entry. You guys need to know where I'm looking to target. All right, guys. So I just wanted to show you where I was actually targeting for Euro USD. So I was targeting these equal highs over here, these equal highs. So look at this, price traded into this level a few times over here, and it traded one more time into here, but they didn't run out the highs. So there was liquidity above this area. So this is why this area here became my target. This level came in roughly about 1.19079. And now when I go back to my actual trade, I'm going to show you exactly where it went to. Okay, so now I want to show you guys what actually happened. I'm just going to hit this button over here. So I'm just going to do it candle by candle. So they traded back into the area, as you can see. Still traded back into the area, as you can see. And boom. So right to this last point. So that level came in at 1.908. It traded right to our equal highs, which was literally at 1.19087. So I believe it was 1.1907. So you can see it literally just went 1 pip above those equal highs. I still believe there's money up there, but this was good enough, as you can see, right to the money. And what they did was they used news, to cover up the fact that they were going straight to the money. And just to show you that it didn't actually stop me out first, I'm going to go down to the lower time frame to show you that too. So this is the 5-minute time frame. I'm hit the replay button, makes it look a lot cleaner, and let's just do it from here. There we go, lovely. 5-minute time frame. As you can see, what happened? Price accumulated at this area over here and then took straight off right to those equal highs. You always take partials, or you always close off your position once they've tapped into that liquidity. That was an example of trading towards the money in a bullish market. Okay, family, so here's another example of trading towards the money. This is actually a trade that I'm in right now, but I've taken off my annotation so I can explain to you guys what I'm actually seeing in these markets. Just to show you what I'm seeing, first of all, if I move this to the left, you can see price here ran out the liquidity to the left. There's liquidity above these highs too. So when price ran above that with an institutional candle to the top side, the moment they broke beneath the short-term low, this was the short-term low that produced the leg that ran the money. The moment they broke beneath that, this automatically became a drawn price, these equal lows. Then all you have to do was literally wait for price to return back up into this last up close candle, then catch a sell trade to the money. Okay, so this was the money. And if you wanted to hold it for a longer period of time, then you could have held it and prices continue to drop all the way down. Now you can see where price is right now. I'm going to put my annotations back on now so you guys can actually see what I was talking about. You can see here, this was my trade. As you can see, I identified the last up close candle, and when price returned back to this level, this is where I jumped in for a sell and sold price to this level here. And then if you wanted to, you could have taken partials at here or closed off your position, and that still would have been blessed for a short-term play. So that's just another example of trading towards the money. All right, guys, so that's going to be all my examples of trading towards the money. Hopefully you guys like it. If you did like it, let's try and get 400 likes in this video. Then I know you're ready for the next one. Other than that, guys, have a blessed day and peace.